Hi folks, it's Doc's Market Minute for Monday, October 5th. Here's the S&P 500. Let's go back to what I was talking about in late August when we were dealing with this move to the downside. I felt that there were three possible outcomes from there which we were going to constantly examine for. The one, first of all, was going to be a V-bottom. Just like that. And the reason why is that over the last couple of years we've seen these incredible V-bottoms happening in the world of quantitative easing. And I believe that this is why we were seeing those. I've gone over the last 100 years of charts and I've just never found a period where we had rallies actually happening faster than the pullback that got them there in the first place. So one of the possibilities was obviously a V-bottom from here. Now what happened was when we set up with that lower high setting up here in September, we eliminated the possibility of that V-bottom. And besides the fact that we were in kind of a choppy bounce to the upside to begin with, more of a range-bound bounce, if we were in a V-bottom, we would have noticed that right off the bat. We would have done something like that. So we eliminated the V-bottom, and so we have two possibilities left for how the S&P can continue after this correction. Now, the first example of this is probably best viewed back in 2011, what we had in 2011. We saw the initial correction from here. It was pretty strong, okay? And then we bounced around for a few weeks before undercutting the lows. So testing the lows with an undercut, which is probably about the best way you can do that. And from there, what happened after that was kind of a volatile escape from the correction, but eventually we went into a quiet and trending market. So that's one potential outcome for this, is that after the last couple of years of doing nothing but going up, perhaps this is all we're going to see is just something like this where we see a correction and that sets up a major higher low with an associated higher high from there, and then we escape to the upside. So this is definitely one possibility. The other possibility, obviously, is that we don't go like that we do something similar to what we saw back in 2007. Now, this can come in many forms, but really what the major thing is that we go from a period of quiet and trending market all of a sudden into a very noisy market, which is exactly what we've done. And so after this initial correction to the downside that we saw back in early 2008, this set up with a major lower high here. And this was a lower high on the monthly chart as well too. And this is what made it very important, is that major lower high set up, and instead of putting in an associated higher low and then rebounding from there, it just kept on going. And so at this point we knew that it was all over. So that's our third possibility, is that we set up with a lower high here and then we roll over. So in either case, what I've been looking for, and it looks like we have this in play now, is a rally into the fourth quarter. So far this is what's in play here. We've only seen, 5 days of it so far. So until it starts breaking out and passing the former highs, this is still just a lower high sitting up here, which could still be range-bound. So we could see something happening here for the next month or two, just going like this before we eventually pick a direction. But as soon as we take out that 2020 high, then scenarios 2 and 3 are definitely in play. Now, I just wanted to bring up the dollar again. I haven't talked about the dollar in a long time because after this move that we had in 2014, which really peaked out in early 2015, at that time I said, this thing is toast. There's no way it's going to be trending any further from here. So when we see an exhaustion level like this, especially below 20, this is typically where we see something going sideways for a long period of time. And this is essentially what we're doing, is we're just coiling into another triangle formation here while this is trying to recover. Now this can start trending at any time because we have energy available at the smaller time frames, right? And so you can see this beautiful pennant pattern here. Well, this is more of a symmetrical triangle because it's a little bit longer than a pennant. Pennant is a very short-term pattern. So a symmetrical triangle on the weekly chart, and eventually this is going to hit its apex and have nowhere else to go, and eventually we see this squeeze out either to the upside or to the downside. But I would say at this point, more likely to start working down from here, especially with after what we saw with the jobs report, the rate cuts are going to be off the table for probably a little bit longer than people expect. I mean, we were trying to shove this rate hike into the fourth quarter, and I just don't know if it's going to happen. So watch the dollar. The dollar right now is in a consolidation pattern, and it will break from this pattern fairly soon. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.